I'm expecting 3%. It grows because people believe that I'm there to help them. And I do a lot of things along the way that they believe that I'm actually helping because I actually am. We got Rob joining us on the call. He's coming through right now. Rob is with Knock. I kind of told you a little bit about it. He's going to give us more details about it. It's not a company that everybody works with. We kind of had to sign up with him as a group. Hey, good morning, Rob. There he is. He's muted. Good morning. Good morning. We got a handful of people on here. We were just doing a little market updates.
Awesome.
I think everybody's excited kind of to hear how we can be a little bit more competitive in the market. And I think being non-contingent is the best way. You need any introductions? Rob, here's the team. There's Rob.
Hey, everybody. Good morning. I know it's you guys' lunchtime coming up soon. It's 1:30 here in the Atlanta market. So I won't take too much of your time. Let me go ahead and start sharing the screen. All right, Jared, thanks for having me again. I'm glad we cleared up the time difference. That would have been bad.
It would have been.
All right. Can you allow me to share my screen, Jared?
I believe I can. There you go.
Awesome. All right. So let's see. Can you guys see my screen?
We got it.
Yeah.
All right. Let me see if I can get this out of the way. All right. Well, good morning, everybody. Thanks for having me again, Jared. I'm excited to be here with you guys. Titan One is, like he mentioned, one of a few brokers that we are partnering up with in the Colorado market. It's invite only, and it's an exclusive program to partnered brokerages and for the home swap. So it's invite only. Not a lot of agents will have access to this or the ability to offer the home swap for your clients. So let's go ahead and get this started. And I'll do a quick 10-minute high-level presentation. You guys can ask questions, put them in the chat box, and I'll address those at the end of the presentation and show you at the end also how to register to become a Knox certified agent. All right, so let's go ahead and get started. Knox Home Swap Program and Titan One Realty Group, a better way to buy and sell. So the old adage of the chicken or the egg, 64% of home buyers are selling at the same time. What do you guys do as agents to advise your clients on what to do, especially in this low inventory, highly competitive market? Do they list their house first and then hope their dream home pops up on the market and make an offer, but that offer is a contingent offer? Or vice versa, look for the house, make an offer on the new house, and then scramble to hurry up and list the old house, but you still have that old contingent problem because you still have to worry about the sales contingencies. The last option, not many people qualify for. They can opt to get 2 mortgages, but that affects their purchasing power and DTI for the purchase of the new house. So what if your clients could buy their new home before listing their old house for sale on the open market? Move into the new house before they list or sell the old one, and then while they're settling into the new house, repair and get the old house ready to put on the market. The Knock Home Swap is the answer. Knock is the only lender that enables your clients to buy their new home before selling their current one on the open market. And we're able to do this without factoring in the debt of the old mortgage. And we're also able to do it without factoring in the DTI of the old mortgage. So it gives them full purchasing power for the new house, and it empowers them to move more freely because it's more convenient, more certain, and more cost-effective way to buy and sell. So how does the home swap work? There's 2 components. The first is the new mortgage. It's a conventional mortgage product. And they also have the ability to close on the new home first. So your buyers are moving into their new home first before they're doing anything with the old house. They're settling in, building instant equity on their new house. And best of all, there's no sales contingencies, especially I know in the Colorado market, as it's the same over here, almost across the nation, where you guys have low inventory. So it's highly competitive. So if you go into a multiple offer situation, your offer is not going to be competitive when you have a contingency on there. So this alleviates that and makes your offer very competitive. The second portion is the home swap advance. The home swap advance creates a second lien on the old home. And we leverage the equity of the old house to be able to provide up to 20% down payment advance for their new home, up to 6 months of old mortgage payments on the old house, and up to $25,000 of home prep funds to repair and do whatever it's needed to for the old house to have it market ready, so you guys can get full market value. Those three things they make up the home swap advance, and it's offered at 0% interest rate for the first 6 months, which is unheard of. So if you think about a traditional bridge loan, a HELOC, it's hard to qualify for, right? And then on top of that, if you do qualify for it, they have high interest rates. Not to mention, if you do get the HELOC or the bridge loan, it goes against your credit, right? So your DTI and your purchasing power for your new house is going to be lower because now you have new debt. So the home swap process. I know it sounds like it's a complicated process, but it's not. We made it very, very simple. You still have your client qualify as if they were going to a lender that you choose right now. They go to knock.com, apply. It'll be fully underwritten by a human underwriter. It's not just your regular approval. It's a fully underwritten approval, meaning they sent in all their documents. So technically, if you wanted to make an offer on the new house, you can bypass the finance contingency if you wanted to, but that's how fully approved they are. Once they're approved, you find a new home, buy the new home, get it under contract, and have them move into the new house. And then the last part is once they're out of the old house, you can repair it, list it, and then whatever funds they use for the home advance, dollar for dollar, they just pay that back. The only difference from the way you guys traditionally do it right now is we need to underwrite the property. We even provide an app that you will learn how to use at the training, and you'll be able to take pictures. We need pictures, interior and exterior pictures, to be able to underwrite the properties to make sure that the house is in good condition. So how much does it cost? So good news is for the customer, it only costs 1.25 convenience fee. There's a convenience fee that's based on the purchase price of the new home. And that can be rolled into the new mortgage, or they can have it paid at the closing table. There is no origination fee. So across the nation, the average origination fee that each lender charges is about 1%. We don't charge that. The 1.25% convenience fee is in lieu of that. Many people just swap it out. And best of all, there's 0% interest on the home swap loan. So the new home purchase transaction example. So this is just basically a summary of what a potential deal could look like on the finance side. Keep in mind, it's not apples to apples because we're not a traditional lender, right? We're the only lender that can offer this program to offset the DTI and not affect their future DTI and purchasing power, and we ignore the debt of the old mortgage. So the purchase price, let's say, is $500,000. The LTV is 95%. NOC doesn't charge an origination fee, so the average lender is $47.50, 1%. The convenience fee is based on the purchase price of the new home, which is $62.50. And there's lender fees. Lender fees are things to underwrite the loan, admin fees, processing fees, things like that. NOC charges a flat $14.50. And based on the average across the nation, it's about $2,000. So the total to the customer for them utilizing the home swap program is $950. So think about $950 just for this one particular deal. Your clients are able to win the bid on the new home because there's no sales contingencies. Number two, they don't have to worry about leaving their house at a minute's notice to be able to show. I have 4 kids. So I don't have any pets. So if I had pets, it'd probably be even more disastrous. But I have 4 kids. So anytime somebody says, all right, we'd like to see your house, especially in this market, you have a showing every 30 minutes. That means I essentially have to take all my kids and be out for the whole day. They don't have to worry about any of that. The pets, scrambling to leave at any time. And then we also leverage their equity to provide up to $25,000 to the repairs so they can extract as much equity as possible in the old house. So for that $950, that's a price that a lot of people will pay, if not more. So just think about the difference that you're getting. Sometimes it's lower, sometimes it's higher or even, but in general, just the value propositions that you're getting for the home swap. So what's in it for you, the agents? You're able to offer non-contingent offers. So you're able to win the bid for your client instead of, I'm a licensed agent. So I know like if you can't find a house, you have to go maybe show 20 to 50 homes. You don't have to do that anymore. You make a non-contingent offer and you can win a bid. There's no timeline stress. So you don't have to worry about other parties performing their side of the transaction, like buyers and sellers for other transactions for your sellers. You don't have to worry about any of that. Impulse buyers. So there's a lot of window shoppers. There's a lot of buyers looking to make a purchase. But a lot of buyers that are also sellers, they are sitting in on top of all the equity, which is their largest savings, right? So they can't tap into that. So the home swap allows them to tap into the equity to go ahead and purchase their new home first. And then you also have people that are looking for a home, but then they don't want to because they're afraid of juggling buying and selling at the same time. You're able to offer the home swap at a very low cost. Best of all, you're able to build your brand. You'll be not certified agent. You'll be able to close more double-sided deals. You'll get more listing consults because you offer more options for your clients. The $25,000 in repairs that I mentioned before, your listings look awesome. So they have very low days on market because they're move-in ready. And best of all, there's no cost to you guys for agents to utilize the home swap. So we have over 700 five-star Zillow reviews. I won't review all of these, but I'll just go over a couple of them. When I first learned about Knock, I was skeptical. It seemed too good to be true. I'm so glad that we decided to give them a chance. Being able to move into our new home while making repairs and selling our former home without paying 2 mortgages was wonderful. Knock's process completely eliminated all the stress that comes with the standard process. This was a client of mine, but she was also a Keller Williams agent. I'm an agent with 5 years experience and really apprehensive at first about Knock, but the program really suited our needs with getting this one particular house. Had time to prepare for ours for sale and listed without the hassles of showing our home to strangers while we lived in it during the scary time. So feel free to review all the reviews that we have on there to see what consumers are saying about the home swap. Just to give you a little tidbit of information on myself, I'm a licensed agent. I no longer produce, so and you guys are in Colorado, so I'm not in direct competition with you guys. But I've been licensed for about 12 years. I did almost anything that you can think of. I was a loan officer. I flipped homes with a couple of investors. I have rental properties, and I was also a traditional agent. And on the traditional agent side, I was able to close probably 1 to 3 deals on a monthly basis. And I've been with Knock for just a little over 2 years. And during the time that I've been here with Knock, when I was producing within a 15-month period, I was able to close over 103 transactions that equated to about 30 million in sales. There's no way I would have been able to close that many deals without being able to offer the home swap. So I truly believe for you guys as agents, you guys have this other option to offer your clients another option to be able to buy and sell at the same time. So the next steps is you register in our system. We call it the backyard. Right after I get off the phone with you guys, I'll send you an invite. Check your spam. Sometimes it does go into your spam folder, but probably within 30 minutes, you'll have the invitation. You'll sign up for training. Once you register, we have trainings 5 days a week, so you can attend at your convenience. It's about an hour long, and we do have a brief knowledge check at the end. It's a test. Just to let you know, if you're not a good test taker like I am, and you fail the first time, you can take it again and again. We don't know how many times you take it until you pass. After you guys pass, you'll have access to our database as well as a plethora of information of the home swap. So if you needed a refresher after the training course and just to get a little bit more knowledge, you'll have access to that. You'll also have access to marketing collateral that's co-branded with Titan One. So you can all essentially just plug in your information, your contact information, your name, and input that and then send the marketing pieces out. We have door hangers, postcards, social media templates that you guys can use and share on social media. And we'll also be providing case studies as well so that you can share with your clients as well. All right, so I'm gonna stop sharing my screen and go over questions.
I have questions.
Yes, go ahead, Bill.
One of them is the $25,000 for utilizing to fix up the property. Could you utilize $15,000 of that and then show that as a $10,000 credit at closing to do other things that the purchaser came in and decided that they wanted to do in addition to what was already done?
Great question, Bill. So I can already tell you're into creative financing. That's awesome. So we can't, how we do it is when we approve the amount that we're going to use to do the repairs on the old house, we get your recommendations up front to say, hey, let's say I'm going to use you, Bill. We need interior paint, carpet replacement. It's going to cost $8,000. So what our lending team they're going to do is they're going to leverage the equity of the old house to offset the $8,000 and put it in an escrow account and have it set aside. So once your clients move out and then we do the repairs with the contractors, they'll pay out the disbursements to the contractors as the work is completed. So they can't do anything for the buyers of their old house.
So do you have to verify that the money that's going to be utilized, do you have to verify that that's something that really is necessary to do?
Yes. So we go based on your recommendations as agents. So if
Okay.
you said we don't need any repairs, I mean, if you look at all the comps, they're all about in the same condition. We don't need to do any repairs. Then we don't have to offset any repairs.
Okay.
Yep.
Are you a direct endorsement lender?
Yes. We're I don't know the affiliation that we have, but we are a lender that does sell off our loans to the secondary market.
Okay, but your initial money is in-house, which is
Correct.
And then also the underwriting, is that done in-house as well?
Yes, we have in-house underwriting, and then we have underwriters through our investors that they just confirm everything after we have everything moving in the processing side.
Hey, how about appraisals in Colorado? Who do you utilize for that?
So we use a third-party management company. I don't know who. We don't have any one particular appraiser that we use, but we do have several different management companies to order appraisals.
Okay, cool. All right, good. Thank you.
You're welcome. Great question.
Sorry, Jared.
I was just going to ask on that one part with the 25,000 in rehab support. Is that something that's not available till the completion of the purchase, or is that something that can be utilized before the transition of the purchase?
Great question, Jared. So typically, when you guys go through training, you'll know how it works, the mechanics. But when you guys have the Home Pro app on your phone, take photos of the property, and then at that time, you'll mention any repairs that's necessary. And then once they approve the amount that you guys want to list the house for and any repairs necessary, then you'll know the repairs that's needed. And we have a home prep concierge team that can onboard your agents. We also have agents that we've already vetted, but we can onboard any contractors that you guys like. And then we get an estimate based on the repairs and scope that you guys recommend. And then we'll have that amount offset.
So it can be done before you actually purchase the next property.
Correct. We need the work and the price up front before you make the purchase, because we're very transparent and we want your clients to know how much it's going to cost to do the repairs of the old house. We're not going to do it until they move out, but they'll know the amount.
Right. So we're basically putting the entire plan together from the beginning, and then kind of rolling it out once we have the plans, established.
Correct. Yep. And we execute it once they move out, and they say, okay, let's go ahead. We're all moved out. Let's go ahead and contact the contractors to start work. Within a week, 2 weeks, it should be completed, and then you guys can list the house on the market.
There you go.
So what if originally we thought the fixes on the house was going to be 8,000, and the contractor gets in there and starts doing the work, and they're like, oh my gosh, the floor is totally rotted underneath. We need to do a lot more than what we originally thought.
Great question, Jenny. We haven't crossed that bridge yet. So it's a little tricky with real estate when it comes to items that we haven't seen, right? If they do tear out a wall and then there's wood rot or mold, that has to be remediated, right? So when we come to that point, we'll cross that bridge, but the amount that we're allocated is based on the recommendations that you have. I have not seen an instance where your scenario would kick in and try to figure it out. So I can't really tell you exactly what that would happen, but I'm more than likely they may have to come out of pocket on that additional work, or we could possibly work it in where the contractor says, hey, I know this is above the scope that I recommended and I was told to do. Maybe we can have it closed after we list and sell the old house. So there's definitely different options, but we qualify them upfront based on your recommended repairs.
I guess I also wanted to touch, on, well, and maybe you can answer this. So, you and I, since we've been kind of connected, I've sent you the property addresses. Is that what we
Yep.
need to do? Is to connect with you on the properties that we want to see qualify, or is that something we do on our own?
Yep, great question. So you'll have access after the training once you're certified. You'll download the Knock Home Pro app, and the same username and password that you use to register online is the same password for the app, and then you can just type in the address. And then
Perfect.
it'll pop up at the end saying eligible for the home swap. We need some pictures, and it'll tell you exactly what's next for us to move forward on the home swap process.
Great. I mean, just on my side, just, that convenience of typing in the address and getting that immediate, response. I mean, it
Yeah.
took minutes as opposed to, days. So I was actually able to communicate that right to my client immediately. So I like that.
Yeah. Yeah. So instantly you can actually even be in the listing appointment and pull the app. And a lot of people like the app. Hey, look here, you're eligible. So there's a psychology of, oh, I'm approved, and they get excited about the home to be approved for the home swap.
Well, and this is
So,
something that nobody else is offering. This is a non-traditional, bridge opportunity almost.
Yeah. It's almost like a modern day bridge that we just tap into their equity, and then it doesn't affect their DTI for the purchasing power for the new house, right?
Right.
All the traditional bridge loans, they're almost non-existent and they're hard to qualify for, and it impacts their purchasing power for the new house.
When we qualify these houses through that app, does it give us the available variance? Hey, you're at 20% equity, you're at 35% equity, you're at 50% equity. Because I know a lot of the 25 in rehab, the 6 months of covered payments, that's all actually only based on the amount of
Exactly.
equity in the home. Do we receive that equity amount?
Yep, great question. So you get a rough estimate on the equity amount, and that's why they're approved. We have algorithms that look at the confidence rating. That's one of our main factors to make sure that the confidence rating is high. If it's below a 60% confidence rating, they may not qualify. But about 80%, 80 to 85% of addresses that are inputted into our system, they qualify. And then they give you a rough estimate on the equity position. It could change because we're just pulling it off tax records. So when you talk to your client, you'll see their equity position. The threshold that we like to see is a 30% equity position to qualify for the home swap, but we've gone as low as 20% based on, they didn't need that many repairs. They only want to put 5% down as opposed to 20%. So there's a lot of different variances that come up, but that's what we're here for. You can also reach out to me and say, hey, I have a loan scenario. The client wants to do X amount and, extract this much amount. Can we push it through? And we'll try to get that exception for sure.
I
Oh,
got some more. One of the questions I have is, I thought I heard you say that you need to basically approve the price that we list the property for. Would you go into detail about that, please, and how you determine what a correct listing price would be in this market?
Yep, great question, Bill. So we go off of your guys' recommendation, but we do verify it, right? We're a real estate tech company with a mortgage arm, so we do verify it to make sure that it's not over 50,000 or 100,000 what we see as the market value. So let's say we have an agent who has a home that's the market value and the supporting comps is at $100,000, but the agent says, hey, we should list this for 175. That probably will throw red flags, and we'll probably have let the agent know that we can't list it for that price because it's too high priced and the days on market is going to be long.
What vehicle do you use to secure your financial involvement in this process per property? I mean, how do you know that you're going to get paid? And I guess number two is, this is good for 6 months. What is the recourse if for some reason the seller decides they don't want to lower the price, whatever, after 6 months?
Great question. So we have a list of investors that we work with and also pulled within our own cash to be able to provide the bridge loan. And we have investors that front the money based on us underwriting the property. The 6 month portion, we have a backup offer that after end of 6 months, and you'll go in a little bit more in detail on training on that. So we provide a backup offer, which is typically about 15 to 20% below market value. And the backup offer and us paying the 6 months of mortgage if it's needed, that's what is the lending mechanism to allow your clients to qualify for the new house. Because they have a backup offer, Fannie and Freddie see the house already sold. And then that's how they qualify for the new house. So they don't have to take a backup offer, but it's there. Obviously 6 months is a long time, but we can't determine what's going to happen with the market. But this backup offer is essentially there to be able to have them qualify for the new house. They don't have to take that backup offer, but if they don't take that backup offer, all the advance funds that we fronted and advanced them will be due after the 6 month period. And then there's other options. They can rent it out or sell it at that price, or another option. We have not had to buy one house as of yet.
Right.
So just to let you know, we have not bought one house yet, because 6 months is a long time. And on top of that, you're leveraging the equity to do the repairs on the old house. So most of the homes that we've done with the home swap have sold more quickly than somebody who would not do the repairs.
Rob, do we know what that backup offer is up front, or is that something that's found out 6 months down the road?
No, great question. So your clients, once you approve their property and they get qualified, you'll know exactly what the backup offer is, and then you can talk to your client about the backup offer before you make an offer on the new house. So they'll know exactly.
Right, which then gives them that anticipated amount. Like, hey, if we got to start doing price reductions because we're getting close,
yep,
we still know we're off that backup offer mark, that we're still going to make more money. So it's
exactly. So yeah, and when you tell the clients that we have a backup offer, and you tell them, hey, days on market is about 10 days in the area. I don't see us taking the backup offer, but it's there as a lending mechanism, so you get qualified for the new mortgage without debt of the old home. And then it also helps you as the listing agent, if you need to do price reductions, that they're more inclined to do so faster than later.
Right.
Cool.
How's it? I'm curious to know. Maybe I'm overthinking this. How's this look for somebody who's got 100% equity?
Great question, AW. So we can do anybody has a clear title on their home, but they have to get a mortgage. And we can provide up to 20% down payment based on their equity. So they would apply for their new home and put 20% down, any repairs necessary on the old house. Once they move into the new house, you sell the old house, there's no prepayment penalty, so they can pay it off once they sell their old house. So that's how we've done it with people who have clear title. Because most of the people who have clear title, they're retirees, or they are in that season of life where they don't have that much income, so they may not qualify as much, but putting 20% down, and then they can pay it off after they sell the old house.
Okay.
And then Rob, how competitive are you guys with the interest rate?
Great question, Aquila. So it's very competitive. I will say that we've had a couple of agents reach out to me and say, hey, Rob, the difference in rates are about a quarter point. Sometimes it's better, sometimes it's even. But the highest that I've seen it as a quarter point. Our team is constantly looking on a daily basis to look what the rates are to be competitive. And when you have the Home Pro app here in the next first quarter, you'll have updates on what the rate is going to be for that week. So you'll know what the rate is. So let's say it's right now I've seen as low as 2.2% on a 30-year fixed.
So let's say the buyer or the seller gets qualified. How quickly do they find out? And let's say I found a house for them and they're interested in, normally with my local lender, I'll just send them a property tax amount if there's HOA, and have the lender send over the monthly mortgage, interest rate, all of that to my buyer. Right. That way they know before I even make an offer. Right. Will you guys be able to provide that kind of service?
Yes. So ours is a little bit different because we're not pulling a soft credit pull, right? It's a fully underwritten loan. So it takes right now the turnaround time is about 72 hours, but it's fully underwritten, meaning we've already collected their income docs. We've already submitted everything that we needed on our side, verified the income, W-2s, all that has already been submitted. So now once we give you an approval, it's a full approval, so you can start making offers right away. You don't have to worry about reaching back to us. The only caveat to that is if it's new construction and it's let's say it's 100 days out before it's built, every 90 days we need to pull credit to make sure that they didn't buy a car or get new credit before we close on that loan. So
really the approval time is driven by the purchaser. As long as it takes them
correct
to paperwork is as long as it takes to get the approval.
Yep. So let's say, Jared, you're a client, you say, hey, all right, your property is approved. We can go ahead and move forward with the home swap. Go to apply.knock.com and start their application process. If they only send half of their documents that we need to fully approve them, then our team will reach out, and we can't start the clock until they submit everything.
Is there a kind of a status report that is attached to each of the applicants? You know, hey, 50% of the way there, 10% of the way there, you haven't done anything.
Yep, great question. So we do have a tracker for you guys and the clients that's in the works. It's not completely baked out yet, but it is in our system where you use that same app and it's everything centralized, and you'll get a ping on updates. So we're working on that. We're trying to get it launched by the first quarter of next year, but it's coming very quickly. So we should see that on there so you guys have updates.
And are you assigned to just one lender or one person that's doing all your lending, or is it a team?
Yep. So we have mortgage loan advisors right now in per market. You will have an advisor per market. We're ramping up to hire more, so you have a group of people that are dedicated to your market. So let's say the Colorado market right now, Montana Brewer, she's the one doing a lot of the originations there. So you'll have that contact, and then as more loans come in, then we'll have to hire more mortgage loan advisors, but you'll have your set of team members that you'll have access to. And you'll also have access to me for any emergency cases that you may need to escalate anything.
Done. Good stuff.
Condos, manufactured, townhouses, am I restricted to single family homes for the security?
Hey, Thomas. Yep. So anything that falls in the parameters of a conforming loan limit, you can. So townhomes are okay. Condos are okay. Manufactured homes, they are not as of right now. But if it's a particular thing that looks like it can get approved to conforming, then we can get that exception. But typically it's for anything that's approved through conforming loan limits. We can also do fourplexes as long as one of them are owner occupied.
And so this is actually just owner occupied financing.
Yeah. Yep. Correct.
And then going back to the 100% equity, because I had a similar question.
Sure.
If I've got a client who owns a condo that is going to somewhere in the approximately $250,000, and they're going to want to roll 90% of that equity over into the new home, is that still a two mortgage situation, or is it a single mortgage with an expected payout or a contracted payout?
Great
as far
question,
as the
Thomas.
prepayment?
Yep. So the max that we will upfront advance is up to $20,000. So let's say they have $100,000. They want to put 20% down on the new home. We'll provide up to 20% down payment based on their equity for the new house. Everything else, if they wanted to bring more money to the table, they can, but our investors will only allow up to 20% down payment on the new house. So they would still be in that area where if they only have 20% based on their equity position, that they'll still have to pay it off after they sell the old house.
So they can't put
90% down. That is correct.
Well, I guess what I'm saying is they got a $250,000 condo and they want to put $230,000 into the new house.
Yep. So they would still have to get a loan, but it's still restricted for advance up to 20% down payment on the new house. So that's how much we're going to advance based on leveraging their equity. They have not put anything out because they haven't sold their house yet. So whatever falls in, the max that we'll pay is up to 20% of the new purchase price.
Well, that lowers their purchasing ability because you're only allowing them for 20%.
Well, yeah, it does because, if they're using their equity, they're only limited to 20%. You are correct.
So they can't look at a $500,000 house expecting to put $240,000 into it.
Correct. If it's a $500,000 house at 20%, it's $100,000. That's the max that we would advance them. If they had cash or investments anywhere else to put more down payment, they can, but the advance is up maxed at 20%.
Okay, so it doesn't sound like it's very good for a 100% equity position.
Well, it just depends on what they're willing to do. If they want to put, like you said, 90% of it, yeah, probably not, because we're not going to advance up to 90% for the new home.
Well, so here's the question then, Rob. Can you reforecast the loan once that home's sold? Let's say you have that additional equity once it's sold. Can you reforecast the loan and apply those funds?
Yep.
Yeah, and I normally call that a recast.
Yeah, it is
Right.
recast. Yeah, you can recast if you want. You can go through us to recast. It's very minimal. It's It's about $300 to $500 to recast their loan.
And that can be done within 90 days, 6 months.
30 to 60 days from the time they sell the old house.
You guys have Spanish-speaking lenders?
We do have Spanish-speaking mortgage loan advisors. Yes.
How long have you guys been in Colorado?
I want to say 8 months
Okay.
this year. Yeah, so it's limited. We are expecting to launch in the Colorado Springs sometime in the first quarter. It should be, we're hoping in January after we get the FMLS licensing agreements, but it should be here very shortly. So you guys will be able to do home swaps cross markets from Colorado Springs to Denver, across the nation, and any of the 15 markets that we're currently in.
How many transactions, I guess, have you guys closed in Colorado in the last 8 months?
I don't have that number. We have a lot in the pipeline, but I don't know exactly how many loans that have actually closed. I can get that for you, Jared, and send it if you'd like. Yep, AW.
Yeah, it sounds like then there's a limitation on location in Colorado, so only in the Denver, like Denver proper. No.
It's a pretty big, yeah. It's the surrounding cities too. So it just depends. The best way to look is when you have your app, you'll be able to check if we're in that market because it'll tell you ineligible if we're not in that area.
Okay.
But it's pretty broad to be able to offer it because our current agents are using it across Colorado.
Do you have a map of that you could share with us?
Yep, you can go to knock.com/cities. It's not a particular, it's not a map per se, but it does give the markets. But I think the best resource is going to be the Knock Home Pro app where you have access through your fingertips.
Good stuff. I think you either know if it's going to work or you don't. I think that's the best part. I like the immediate response, just actually putting in the address and identifying as quick as we have.
Yeah, and everything is going to be at your guys' fingertips. We're rolling a lot more product, so it's more convenient for you guys as agents to have access to that and to be able to talk to your clients immediately on the approval and what the next steps are.
Well, and it also gives us an edge, or more competitive edge with Zillow, because that's exactly what they're doing, but it ends up costing the seller a lot more than the $8,000, the 1.25%,
Yeah.
So if that's something that they're interested, at least you can offer this, because, if in the past, I didn't have an option if that's what they wanted to do because they don't want to deal with putting their house in the market.
Yeah, that's right. And with the iBuyers, you're actually giving away more because when they do their due diligence, we've already seen that, right? You guys as agents, when they do their inspections, they say, hey, we need this fixed. We need a price reduction of $10,000, $15,000. You don't have to worry about the home swap because what we're doing is we want you and your clients to extract as much equity as possible, and we put our money where our mouth is by offering to advance up to $25,000 in repairs, down payment at no interest, which is unheard of.
I'd like to intervene here. Another thing you can do too would be to do a pre-listing inspection by a quality inspection company, find out what things need to be repaired and get the money to get that stuff done and document it when it comes to the listing. And another thing too, with the days on market here being as short as they are, this kind of seems to be a no-brainer. This seems like a really good deal. So I'm all in.
Thanks, Bill. Thanks for your thumbs up on that.
His advocacy, you're right. We didn't even set him up for that.
I know. Hey, how much did you pay him, Jared?
Yeah, he's at the bar right now. I can see it.
We're still talking about the negotiations here, okay?
All right.
Bill's pretending he's drinking at the bar right now.
What Jared did say is that if any of these homes are in a position where you guys take them over, that I'm going to be the listing agent for you.
I already negotiated that one.
Training starts tomorrow. So you guys can, if you guys have training, a lot of agents are going through somewhat of a little bit of a downtime right now, seasonality with real estate. but it's literally an hour long of your time. But I promise you, you'll see the benefits and reap the rewards when you offer this to your clients.
I mean, just speaking to it, puts us at a competitive edge, So, I mean, even presenting this at a listing appointment, whether or not it's something that we utilize, but another tool that somebody else doesn't have, helps separate us.
Yeah, I agree with you guys. That for sure. It gives your client another option, especially if they have things that they're worrying about, because most buyers that have moved into their first house and they're ready to do it again, they don't know what's on the other side of that. You guys know as agents on the headaches of dealing with buying and selling at the same time. The client does not know.
Great. Love it. Appreciate it, Rob. Anybody got any questions? Darla?
Nope, I've got a client though. I'm anxious to get started.
There we go.
Darla, we've been talking via email, right?
Yep.
Cool. What I'll do is after I get off this call, I'll send the invites to you guys. So definitely just register if you want. If you have time to take training tomorrow, feel more than welcome to do that. And if you guys have any questions, definitely reach out to me.
Last one, I think you touched on it though, is within that app or after we've completed the training, there's going to be kind of a cross-branded information packet that we can share with our clients, correct?
Yep, you'll have a link directly for Titan One, and it'll have all your logos on there, and all you have to do is plug and play. Just put your information. We have a plethora of marketing material, and we always add on to that on a monthly basis. So definitely use that as a resource.
Great.
Plethora.
Yep.
Great word.
Good word, huh?
Thanks, Rob.
Great.
All right. Thanks, guys. Have an awesome weekend, and talk to you soon.
Thank you,
Thanks,
Rob.
Yeah.
All right,
Thanks,
bye-bye.
guys. Have a great day.
Thanks, Jared.
Thank you.